All right, hello everyone and welcome. My name is Yaroslav Burchenko and welcome to 2022. All right, we are here today to discuss the potential opportunities, the trading opportunities that we can see in the new year, and also the potential risks. And it's very good to see all of you today. Welcome to the webinar. Let me know if you cannot see me or hear me in chat. And if you have any questions, also please let me know and I'll answer them. Feel free to ask anything trading related. I will answer your questions more towards the end of the webinar. So good to see you guys. How was your holiday period? Let me know in chat real quick. I'm gonna see what you guys are typing out. Today's webinar is gonna be about 30 minutes long. It's gonna be very, very information heavy, so make sure that you have a pen and paper and you are ready to write. Perfect, so I can see that the sound and video is working, so let's go ahead and close that. So wonderful, let's get started, you guys. So we're going to discuss the short-term prospects and then we'll transition over into macroeconomics. Going into 2022, the key market sectors to watch for are going to be gold, oil, automobiles, services, and housing. Those are the 5 top sectors that we are forecasting is going to grow more than some of the others, like say financials, and I'll explain all of that a little bit later. Actually, this webinar is going to be very helpful to those of you that are beginners, because I'm going to, put you into the flow of things, and it's also going to be helpful to professionals because in this webinar you're going to learn a lot of the things you'll need to know going forward in the next month, quarter, and half a year. All right, so good evening, Birenda Singh, Hendrik Gabriel, welcome, and Kareem Zar. Welcome all of you guys. Good to have you with me. Thank you so much for your well wishes in chat. Now, President Biden has reappointed Jerome Powell. He is the Federal Reserve chairman. His tenure is coming to a close, and the U.S. president has reappointed him back into that role. And I'll tell you why this is important. Hey, Sadev Manas, welcome. So there are, besides the chairman, there are 3 other positions that are going to be filled by Biden. Now, this is important because President Biden now, when he appoints his own people, including Jerome Powell, he's actually got a lot of say in things. He has a lot of sway, so he can take monetary policy and push it where he wants to go. And he's doing some really interesting things that are going to impact the stock market. Now, Jerome Powell is slowly sinking the ship. Now, the Fed is organizing a smooth transition out of quantitative easing, and the balance sheet is above the level of where it should be. And so what they're going to do is they're going to increase rates sometime soon, and they're going to cut back quantitative easing. Now, this information was made public on December the 15th. So if we have a look at our indices, like say the S&P 500, we can have a look at what's going on in the daily graph, and we can see that on December 15th, right here, December 14th, 15th, after that, the market stumbled. If you can say that. The market stumbled the very following day. And so I'm going to tell you what to expect, what we're expecting from the financial markets, and especially from the US indices. These are the most popular instruments. So the US markets are, US equities are probably going to be the best investment opportunities that we're going to have this year. So let's discuss it a little bit more. The indices, so when they decrease quantitative easing and they increase the interest rate, that is going to draw down the S&P 500, the Dow Jones, and the NASDAQ. With those indices, the rest of the world will follow. We have the likes of the Japanese who constantly mirror, like the Nikkei 225, it mirrors That's really interesting. Is it only in fixed time trades? It mirrors what we can see in the US markets, right? 15th, the same tumble, the same few days of tumbling that we saw in the S&P 500. So you can see that these trends, these kind of bearish trends are already forming. If we can have a look at the Dow Jones, right? This doesn't instill, although we see a series of higher lows and higher highs, we don't see the same picture on the indicators or the oscillators. And so we can kind of see that bearish forces are forming in the market. Now, if the indices do climb again in 2022, like we saw in 2021, it's going to be due to the economy and the corporate fundamentals growing. Despite the monetary policy becoming more hawkish, or the economists that we employ, they are expecting a slowdown from 2021. So we expected 2021 to have GDP growth of 5.6% in the US. Expectations this year are only 4.6. And actually Truist and LPL Finance are forecasting something very similar to us. They're predicting 4% to 4.5% GDP growth, and Wells Fargo, a US investment bank, they expect 4.5%. So the growth this year is expected to be stifled. Now, the S&P 500 earnings, the earnings that we're going to see from the companies, they're expected to grow 9% in 2022. That's way above the 10-year average of 5% that we have seen for the S&P 500. And all the S&P 500 sectors are projected to increase earnings. So we have all of them except finance, right? Finance, when the interest rate rises, financial institutions, their earnings decrease. And so we are on track. We are on track for a surge in earnings, but we expect the US market, due to the financial fundamentals, to decrease. So I'm not sure if those two will cancel out, but for the time being, spend the majority of your time learning and preparing. The markets are relatively flat right now anyway. This new year was totally different from 2019 and 2020, where we had really sharp spikes in currencies and commodities. Right now we can see that it's a little bit, flat. The markets are flat. So which sectors should you pay attention? The top industry sector that's going to grow is industrials. We expect a 45% surge in industrials, and you can find those stocks right here. And the Stock PT platform actually offers you the best kind of long-term investment opportunity on the platform. So make sure that when you target a specific stock, make sure that you weigh your options, whether it's better to use a multiplicator on the Forex platform, or whether you want to invest for the long term and ride the longer wave on the Stock PT platform. Another another sector that's doing phenomenally well, and we expect to continue so, is the consumer discretionary sector. They are going to see a growth around of 32%, which is quite substantially higher than the market average. And energy earnings should jump up as well to about 28%. So we have Yashan Parmar asking how to trade more accurately on Asian commodities and European composite index. That's a really good question. I'll go ahead and answer that right where we are right now, because I use the CCI indicator specifically for trading indices, and I'll show you how it just does phenomenal. So have a look. This is the Asia Composite Index, what Yashan Parnar asked for. And every time that we see a change of trend, so we are very high, have a look at this indicator right here at the bottom. When we go to a very, very high level, and then we break down below the 100 area right here, this top line is the 100 area, that's usually a safe time to buy. Now, unfortunately, the signal here would have been corrupt. I mean, it would have been inaccurate. But remember that most indices, if you look at a historic graph, most indices grow. So what you want to be pinpointing. The entries that you really want to look for are the ones down here from the bottom. So anytime that we are oversold, right here, we're oversold and then we break out into this level, if you would have bought at this area right here, the next candle was massively bullish. Massively bullish. This may have been a bad example because we were in the middle of a sell-off. September, October was a very difficult period for the Asia region. That's also when the Omicron variant became widespread. And so you really want to pinpoint, you really want to use an oscillator. This is for you, my friend. You want to use an oscillator. And if you're trading indices like what you have suggested, you want to go from the bottom up. It's very, very risky to trade from top to bottom, although it does work. I use the CCI indicator to trade the NASDAQ, the S&P 500, the Euro stocks, and also the Nikkei 225. So for my indices that I trade, the CCI indicator works phenomenally. Now, anytime the Fed begins a rate hike, let's go back to U.S. stocks and the U.S. topic of discussion. Anytime the Fed begins a rate hike cycle, which they're planning right now and they've made public December 15th, the equity market, which is stocks, equities or stocks, the equity market gets jittery. Right? Now, that doesn't mean that they fall right away. They're not going to fall right away. They fall usually after the second rate hike, and I'll tell you more about this in a few minutes. But we expect that the period that we're in right now to bring about more bearish movements on the indices, not on particular stocks, but the broad indices. You can see that the NASDAQ, unlike the Dow Jones, is tilted to the bottom. Tech stocks are overpriced right now, and they don't even figure in our investment opportunities moving forward. Automobiles, Tesla, yes, but say Facebook, Google, Apple, and I'll tell you more about Apple, why Apple may be a shaky investment opportunity in the first quarter coming up. So could the Fed spoil the party? Eventually, yes. Eventually, they will cause the markets to turn bearish. But before that happens, the monetary conditions, they need to transition from easy, which they are right now, into tight, like all the way on the opposite side of the spectrum. And this is a considerable distance in the future. This isn't expected in the first quarter. And I'll get to this in a sec. There's a Fed Funds Futures instrument. You guys can Google that, Fed's Funds Futures. This is an instrument that allows you to consider the opinion of other investors when the next rate hike will be. Again, opinions are, everybody's got an opinion, but this instrument gives you a guideline of when you can expect. So there's a 50% chance that the first interest rate hike will come at the first Fed meeting in March, and the asset of choice in 2022, something that I'm going to be trading, and you can see during these webinars and my videos what we'll be doing, will be equities. And that's equities, again, are stocks. So you can find some really good stocks on the Forex platform. A lot of these stocks are AAA grade, right? They're really good investment grade stocks. Excuse me, they're not all AAA. I believe Microsoft is the only AAA grade company right now in the stock market, and it's also the biggest company in the world, right? Microsoft has a monopoly on computers. But the asset of choice, like I said, is equity, and it's not because monetary policy is tightening, but also because massive coronavirus stimulus is happening across the world. And as that money is getting shoved into the economy, a lot of it, inevitably finds its way back into the US markets. That's why we're talking about them for so much right now. Also, there's a lot of pent-up demand, right? Are you guys tired of sitting at home? Are you guys tired of working from home? Do you guys feel like you really want to travel and you really want to? It's worldwide. There's a lot of built up consumer demand, and that should keep household spending and spending and spending in the new year. And this will give time for businesses to rebuild and to restock up inventories and boost capital spending, which then should result in a bullish move in the markets. I see no sign of a recession right now. There were talks of a recession in Europe. as of right now, as of this webinar, I don't see a recession happening sometime this year. So that's off the books. Now, stocks tend to perform badly when inflation runs hot, and that's kind of the major issue central banks are having right now. There's a lot of inflation. Money is losing its value because they're printing so much of it. And so in such a climate, there are some sectors that perform better than the others. And I'll tell them to you right now. Make sure to write them down. So the best sector, and we actually have it on our platform right here, is the equity real estate investments. Those trusts outperform inflation by 67% of the time. And the returns that you can see in real estate amounts to almost 4.7%. So let me go ahead and show you guys that. You can find a ETF that is related to real estate, especially US real estate, in the ETF category right here. Under ETFs, you can find the US real estate ETF. And so this is a combination of of real estate prices across the US. Again, we expect that as inflation grows, this ETF will grow as well. And it's one of the kind of safe haven investment opportunities that you can turn to. Financials, like we talked about banks, financials, I'm sorry, Curtis Duncan just made me laugh a little bit. He's definitely tired of being at home and would love to go on adventures and travel. I'm totally with you, buddy. I really miss traveling. I really want to, visit more of the world. India, I've never been to India. I'd love to go. Indonesia, I'd love to go to Indonesia. Malaysia, all these countries are so juicy to me, so interesting. And excuse me, let's get back to money. Thank you for that, Curtis Duncan. So financials, banks, investment funds, hedge funds, sovereign funds, they are usually hurt by high inflation because it erodes, it chips away at their current loans. It chips away at the loan value that they give. So mostly this impacts banks more than funds. But the energy sector beats inflation 71% of the time and delivers an annual return stable 9% average per year. So the sector revenues are tied to energy prices, which is a key part of the inflation picture. Let's go ahead and have a look at a graph of oil. So commodity composite, it includes oil in it as well, but this is a very important index to have a look at if you're trading currencies, like say the Australian currency or the New Zealand or the Canadian, right? These are export commodity economies. And so this is one of the indicators that you should really have a look at before you enter into those trades. Let's go ahead and have a look at oil. Commodities, Brent crude oil, daily graph. So this is what oil has been presenting us in the last little while. It's been like incredible growth all the way up to around November, December, and then we had a sell-off, and this is across all energy prices, and there has been a supply glut. Now, OPEC is very interested in keeping the price of oil high, but not too high, and so they are going to be reducing the production of oil by 400,000 barrels per day. Is this a good idea? I don't know. Will the markets listen? I don't know, but we expect the price of Brent crude oil to grow in the next little while, and the oscillators and the graph confirm this. I do want to direct your attention to the very, very short term. If you can see the CCI indicator right here, we have the price of oil growing, but the MACD histogram is falling. You see these little blue lines? That's the histogram, and the CCI line is also not making new highs. So again, keep in mind that the markets move in waves, and so right now we have reached certain highs. We've reached local highs for December, for January, but will this persist in the near future? The oscillators say that we could have a dip very soon. Now, the price of oil has been surging on the back of a supply glut, right? There's been a lack of supply. It's been a very cold winter for Europe, and they've really been looking for additional energy carriers. They've even outsourced coal from Russia, and the increase can be attributed partly to economic recovery, right? We have economies are growing after the pandemic, and partly due to growing supply restrictions. Check this out, you guys. The U.S. President Biden, his administration has implemented an anti-oil agenda. What that means is that they are going to limit oil exploration, and they're going to limit the production in the U.S. That was old news. That was back in 2021. This trend is likely to continue. Again, he got together a team of green energy experts, and they're going to be limiting exploration and production in the U.S. What do you think is going to happen with the price of oil? Bing! That's right. It's likely to grow. Let's have a look at gold, you guys. So the price of gold has been super flat, super duper flat over the next little while. And the expectation that we have for the future of this asset is that as the inflation rates rise, they are likely to drive more of this into the gold market in 2022. So we're going to see fluctuations. We're going to see the price of gold spike up multiple times in the first quarter. And I need you to understand that if we're range trading, you don't want to trade anywhere in the middle of the range, right? You never want to trade anywhere right here in the middle when you're trading gold. You always want to take the extremities. So if you need to wait for a better price to arise, then wait for that better price. And so you can use the Bollinger Bands indicator. Here what I have on my graph, the Bollinger Bands indicator is actually really, really good at showing you these extremities, but not all the time. As you can see over here, we kept falling. And so if you're using the Bollinger Bands indicator to buy from low and sell from high, make sure that you have tight stop losses. Over the course of a long period of time, you should come out on top. Statistically, the Bollinger Bands indicator shows you that it grows from period to period, or excuse me, from top to bottom, from bottom to top, in the reverse order of what I showed you with my hands. But so you want to make sure that you limit your risk, that your position sizes are not more than 2% of your account, and that you're stably trading, right? You don't want to miss trading days and you don't want to miss opportunities. But I believe the Bollinger Bands indicator is a really good indicator for the long term. So I'm going to speed things up because there's still more information I need to get across to you guys. Let's talk a little bit about regulation. This isn't something that you can directly make money on, but this is definitely something that you need to keep in mind when you are putting money on the markets. Now, the SEC, Security and Exchange Commission in the US, they've been considering a full ban on the payment for order flow. For those of you that don't know what this is, if you remember last year, the hype around GameStop and AMC and about retail traders taking on big hedge funds and winning, that's the most important thing. Now, there's a big inherent conflict of interest in payment for order flow, right? That's the kind of the business model of Robinhood. And so if the SEC restricts this process in 2022, this will totally break the business model of a lot of brokerage firms such as Robinhood. And it's also going to dampen the surge in trading activity and speculation by retail investors. Just something to keep in mind, because you and I, technically, we're retail investors. So the Biden administration is actually reportedly assembling a team of really aggressive antitrust lawyers. Antitrust basically is when a company has a monopoly on something or owns companies in several sectors, and then they can kind of dictate the price. And so antitrust laws are something put in place to get rid of this scheme so that consumers like you and I, we can, enjoy competitive prices and we can enjoy top-notch service. And so the targets are going to be the technology industry. This is why I'm saying the tech industry may not be such a hot topic as it was over the last 15 years, or after the 2008 crisis, NASDAQ was the #1 investment opportunity. Now, things are changing. So we got technology, pharmaceuticals, agriculture, healthcare, let's see what else, finance, there's other industries, I may not, have named all of them, but Biden has issued an executive order that they are going to encompass 72 initiatives to increase competition in a number of industries and to raise the scrutiny on mergers and limit the ability of employers to force, non-competition agreements onto their workers. So basically, so that you can't. Before, it was common practice that if you leave a company, you can't copy their business model. Well, the Biden administration is going to take this on, so it may be beneficial to more competition. Again, it's good for us as consumers. It makes investing a lot more harder. But the world's largest company by market cap, Apple Inc., is they publicly stated that they were potentially they were at risk of these antitrust actions, and it's becoming a major business risk. So if you're planning or thinking about investing in the likes of Apple, I urge you to really try to take the bottom of the bottom. Try not to buy, buy from the tops. And it looks like a very, very solid company, very, very solid technical picture that I see right now on the daily graph. So there's also going to be a tax rate where, we're going to skip this. There's going to be a minimum tax rate of 15% to multinational companies. This is also going to hurt the broad stock market because that's money that's going out of their bottom line and into U.S. Government treasuries. Also, there's an employment pandemic, right? The economy, it's recovering. Your economy, my economy, we're still in the process of recovering. And so there's a lot of labor market restrictions. I don't know if this is mandatory in your country, but a lot of countries are demanding vaccination from their employees, are demanding and so a lot of people are resigning. Those that don't want to be vaccinated are resigning. And a lot of this is also, even people that are vaccinated are resigning from the workforce that deal in face-to-face customer interactions. And so, we're going to see a lot more strikes. We're going to see a lot more union support. And, people are asking for better pay and better conditions. And all of this for us as investors means that companies' stock prices are likely to go down. Now, whether these trends persist into 2022, it'll have critical impacts on labor costs, supply bottlenecks, and inflations. Again, all three of these are very, very tough on companies, on their bottom line. Also, COVID-19 vaccine mandates are a big issue, but it's not something that I want to go through with you guys today. Kiri Karu, hello, welcome. So what kind of risks can we expect in the long term? Yesterday, the Global Economic Forum published a global risk report. I read briefly over it, and this is the main issues that they talked about, over the next 10 years. Not all of this pertains to our occupation of trading, but all of these factors you should be aware of. So, the COVID-19 pandemic just showed us how susceptible we were to bacterial infections because we all live very close together in densely populated megapolises. And so, another issue that we should really keep on the back of our minds are climate change. These 7 years have been the hottest 7 years in the history of humankind. I'm not talking about the history of the planet. I'm talking about the history of humankind. The 7 hottest years on record. And so for those of you that are living in a really hot environment, please write in chat right now how you're doing. Like above 40-degree weather is, in my mind, is just killer. It's impossible to live without an air conditioner. And so those are basically the biggest issues that you should watch out for. Keep in mind, hurricanes, earthquakes, they all impact different countries. Now, we may not have all of the indices in the world available to trade on my platform, but honestly, you don't really want to trade all of them. I do want to show you that we do have an ETF that is based on the MSCI Brazil. And so if there's ever, kind of How would you not sell this, right? So if there's ever an earthquake or any kind of inflation issue, as there is right now in Brazil, killer inflation, you definitely want to, be aware of what kind of assets we are, and as a savvy investor, participate in shorting those assets, indices, ETFs, as you hear of the environment, causing chaos, right? Chaos is always bad for the stock market, and so always as a trader, you want to be on top of those things. Let me go ahead and bring this photo up, see if there's social cohesion erosion. I really don't know how to make money on that. Livelihood crisis, infectious diseases, again, with extreme weather, definitely something that could impact the market. But here we have at the bottom, natural resource crisis, debt crisis, geoeconomic confrontation. All of these are very probable problems that we're going to have this year. If you guys don't know, right now there's major tension between the US and Russia, like military aggressive tension, right? And we also have the same situation with China. What's going on in the South China Sea, what's going on with the US, putting sanctions that may even hurt the US itself. So keep in mind that you can always, these last three issues, natural resource crisis, debt crisis, and geoeconomic confrontation, when those issues become apparent in the world as you're reading the news, if you notice these tensions escalating, turn on your trading platform and make sure to see what different assets are doing. Because those three issues, 8th, 9th, and 10th, they have a tangible result on the financial markets. So I'll leave that with you guys for today. I'm going to go ahead and look through your comments, see if there's anything that I may have missed. And if not, then I will wish you guys a wonderful trading day. While I'm reading your comments, you guys make sure to check out our social media pages. We have a Facebook page and an Instagram page that you guys can check out. And also check out our YouTube channel. I mean, if you haven't subscribed to it yet, you probably should, because you will get these videos as they come out. But let me go ahead and continue having a look at what you guys were saying in chat. Indonesia is in good night. You guys are ready to go to sleep, hey? Lasitha Habragomua, welcome. Good that you're learning something from me. So Brindra Singh, sir, I have downloaded the application today and I want to know how it works. Oh, you are totally in the right place. If you're new to trading, Olymptrade is one of the best brokers to be with. The amount of money that the brokerage spends on educating its traders is just ridiculous. So here, if you go to the help section and check out how to trade, right here, a quick guide, you can check out the fixed time trading guide, and you can also check out the Forex trading guide. And it's boom, like this, just start training. It'll go through the basics. Let me go ahead and finish this trading. But if you go back into the help section and you check out the help center right here, the help center with an open knowledge base, there's a ton of information here. And the YouTube channel, if you click on the YouTube channel and click on videos, you'll see the entire library of stuff that we have. And I think might even be better if you just check the playlists instead of the just the random videos that we have. So that should help you, Briandra. How to trade more accurately? So Yashindravarn, I answered that question. So I made a complaint about the way how candles made a big gap, which is only found in Olymptrade and not being resolved well. The support person on the chat is denying to send the details, what he said to me on chat via email. I wonder why is it hard for them to send it on email? For me, it's the opposite issue. Olymptrade hides certain gaps. Like I see gaps on the stock market. Like here we can see gaps in the ETF MSCI Brazil. But if we go to the indices, like say the NASDAQ gaps all the time. And I really don't see those gaps here. So I have the opposite issue of what you have. Again, I would definitely, if you're not happy with the way support is working, you can actually remake a ticket in support. Like right here, if you go to help, support. if you're having this kind of consultation here, you can open up chat or even get somebody on the line and then really express your disconcern. Our help is one of the best. I have issues with the platform sometimes, and they help me within minutes, like that. So I'm actually quite happy with support. Make a deal. Let's go ahead and make a deal. I'm going to go ahead and have a look through all of our assets on the fixed time platform. I want to be trading above 90. I also want to drop down to, say, the 5. I don't want to go below 15, but if I see a good trade, I'll go through it. Export and speak Indonesian. Unfortunately, I don't know Indonesian. Great job. Justify Born Shut Up. Thank you for reminding me this. Coming up is the lunar holiday, right? In the Asia region, they celebrate the lunar holiday, lunar festival. And so to celebrate that as well, Olymptrade is going to have another event. Now, if you missed the event in December, it's something really, really cool. It actually makes trading kind of a game, right? You do some quests, you do some tasks, you get bonuses, you get prizes, you get risk-free trades, and it's all kind of in like this very fun, playful atmosphere. So we're going to have something very similar. So come next week when we have the lunar holiday, make sure to come check it out. And there's going to be a contest and event to support that. Now, you ask about contests. We actually have events every single weekend. So right here, the Weekend Cup, you can actually trade through the weekend and earn additional money. So if you're only able to trade during the weekend because during the work week you work, it allows you to trade, make extra money, and be in that atmosphere of competition. I can tell you for a fact that when I was participating in different competitions in my country, that made my trading grow so much faster. When you're competing with other people and you're kind of like looking, oh man, I need to beat Sujal or I need to beat Amit, it really, really helps you to get better at trading. So let me see what else I miss, and I'm also looking for trading opportunities. It may not be the best quality, but it'll really help the gentleman that asked me to open a trade. So thank you very much. I appreciate you as well, Curtis. You are rich with information. Are you an economist? Of course. I have 2 degrees. One of them is programming. One of them is finance. I have a finance degree. How to trade, give a strategy, Indonesia, great stuff for novices like me. Yeah, this is a great webinar. Guys, a lot of the stuff I said may be difficult. Make sure to save it and watch it later. Like some of the really difficult webinars that like used really strong language, financial language, of course, I rewatch sometimes because especially if you're new, some of these words may be, new to you. And so you may need to Google some stuff and so on and so forth. So this makes us come to the end of the webinar. If you guys have any more questions for me, go ahead and please leave them in the comments section below. If there's a really difficult question, our support staff actually sends that question to me, so you'll get a direct answer from me. And it also allows you to communicate with other people in the community. Also, you can read other people's comments because sometimes there's smart people trading, and sometimes they leave some really, really good comments. So trading is really an art of being at the right place at the right time with the right skill set. So put a lot of your effort into education, and then the rest of your effort into being at the markets at the right time. Ooh. So the European Composite Index looks like it came to a high. Nothing on the hourly graph, but if you guys saw on the 15-minute graph, it looks like we could be going lower. So let's go ahead. I'm going to open this up for about a minute, then chat with you guys. $25. I have a quest that I need to do for $25, and that's why I'm doing it. So right here, my daily task, I need to open up 5 trades. And so, was it only for 5 minutes? 5 minutes. I'm glad that I checked that out. So guys, I'm gonna open up the trade for 1 minute though. I wanted you guys to see the trade, and then I'll do my tasks later. So yeah, that's it, you guys. If there's ever a webinar that you may want to see, we're always open. We're always listening to your feedback and your commentary. And we try to provide the most actionable advice, the most actionable information possible. So definitely a channel that you guys want to come back to. And in this new year, I want to wish you guys lots of success. I hope that each and every one of you reaches that financial goal. I hope you find the strength in you to continue on. It may appear that trading is simple, but it is very, it's the hardest way to make easy money. And so I want to wish you guys that perseverance, that dedication and perseverance to your craft so that you can get better, so that you can take, yeah, on the 1 minute graph, I don't know why I took this trade. There's absolutely no signal on the 1 minute graph. Anyways, this was a forced trade. There you go, $25. Unfortunately, I'm in the hole. Come back tomorrow. Tomorrow's webinar, I'm going to talk about the Heikin-Ashi candles. This is an indicator in and of itself. It's not even an indicator. It's one of the chart patterns, or it's one of the layers of charting that you can add to your graph, and we're going to dive deep into the history of the Heikin-Ashi, how it's used, what strategies it's used in. Definitely don't want to miss that webinar. Thank you guys so much for coming today. I wish you guys good luck trading out there, and see you all tomorrow. Peace.